Hi, good morning, good day, wherever you are. Welcome to our global webinar, Real-Time Daily Trading Ideas. We have 5 days a week, 5 different traders. We will speak about trading ideas, strategies, market screening, maybe 1 or 2 questions from your side directly answered in our webinar. Our goal is quick and smart, so let's have a nice start like every day. Today, it's Tuesday, 18th of September 2018. Welcome to our webinar. And like every day, we will start with our risk disclaimer. Forex and CFDs are complex instruments and come with a high risk of losing money rapidly due to leverage. If you are a starter, please start with a demo account and make yourself familiar with long trading, short trading, leverage trading, and your personal risk management. If you'd like to read the full risk disclaimer, just visit one of our web pages, for example, admiralmarkets.com, and you will find the long version displayed there. Also some other information what you maybe like to take a look to, like our kits, key information documents, everything to find on our web pages like admiralmarkets.com. Also information about the different offers about retail clients and professional clients. Since August 2018, the ESMA regulation is in force in the full European Union. Since then, we offer different options for retail clients and professional clients. If you'd like to check that out, just visit our web pages. Or a picture shows more than 1,000 words. If you trade as a retail client or as a professional client, you will have different margin requirements. DAX 30 or Euro-Dollar, 2 prominent examples. Margin requirements could be 24 euro for DAX 30 or 600 euro. All details about that, check it out on admiralmarkets.com. Of course, there are also some plus points. Retail clients will get an unlimited protection against negative balances. Professional clients will get protection up to 50,000 British pounds, what is around 70,000 euro, according to our negative balance protection policy. Also here, all details and more here via this link, what you can see displayed. This is me. My name is Jens. We are a big international broker. We have over 18 country offices. So I'm the German guy. My English is made in Germany, but I'm not the main speaker. The main speaker is the day trader of today. This is our scheme. On Monday, it's Jay's day. Like today, on Tuesday, it's Paul's day. On Wednesday, it's Giancarlo's day. On Thursday, it's Marco's day. And on Friday, it's DX day. Our leading day traders live every business day, every trading day to the same time. And of course, if you like to trade Forex and CFDs, you will get many benefits only with us. For example, DAX 30 or Euro-Dollar, typical spread of just 0.8 points or pips during main trading hours without additional commission. Also here, check all the details out on admiralmarkets.com. And if you'd like to contact us, you can call us or send us an email or visit the other channels like YouTube or Facebook, everything linked on admiralmarkets.com. Enough from my side. Now it's time for our day trader of today. Good morning, good day, Paul. What's your view to the markets today?
Good morning, Jens. Good morning, everybody. I'm hoping that you can all hear my voice. I hope you can all see my screen. I'm traveling today. I'm on a different computer, but there's always plenty of things for us to look at and talk about. So here we are. We're Tuesday 18th of September. I've got a few ideas for us to go through, but I also know that there's always some questions, and I try and catch what I can. So I can see that some people are already asking questions about Dow, Euro, Dollar, Pound, Dollar, Yen. That's great to hear you want to look at Dollar, Yen, because that's one of the main things I wanted to talk about today. But as always, just I'll try and do something a little bit different, something a little bit something just to sort of draw your eyes to. So when I was doing my analysis at the sort of over the weekend, I was kind of intrigued and interested by looking at the weekly chart of Bitcoin against the US dollar. So some of you may be aware, you may join our Monday afternoons Mastering the 4Ms of trading sessions. And we were talking about one of the elements about how weekly charts are great charts to look at if you're trading around a day job and you don't have some you can't sort of trade full time during the working day. Well, you can do a little bit of work at weekends and such, and and actually see some great setups. And looking there at the sort of Bitcoin US dollar, just to sort of draw your attention to it, it's the what we like and see is I see that as a really rather big sort of descending triangle on the weekly weekly chart. So, what I'm looking at is that, where we're getting each of our highs is getting lower and lower, and then we're getting a sort of a not surprisingly, kind of a level of support at around about between a kind of a zone between about $6,000 down to about sort of 5,720. There's a bit of a zone there. You can see it yourself. So what I'm going to be looking to see is are we going to get squeezed and pushed? I'd be my own view on this would be I'd actually probably wait to see if it breaks and holds beneath because it might well be that there's an awful lot of buyers there who might make the initial push. What I'll be looking to keep an eye on that, add to my watch list, and just look as it gets down towards that sort of 6,800 level. Just looking, can it hold there, and sort of will that look as a sort of a bit of a stronger move down to sort of next levels at about 3,000? Okay, which would be a pretty significant move for the sort of the let's say the Bitcoin community. So I think where things are coming to a head nicely there, but it's a case of add that to your watch list, and we'll have a little look at that over the next couple of weeks to see how that plays out. So with that in mind, now we've had done Bitcoin, let's have a little look at Eurodollar. I know we had a question or two about that, so let's bring that up, okay? And let me just bring my charts up here, hoping that you can all see that. So I appreciate we always have a broad range of experience in the room. I appreciate there are some people who are very experienced traders, some people who are complete beginners to the sort of to the trading life. And so just for those of you who are completely new, my charts, I try and keep them quite simple, okay? I just have green bullish candles, red bearish candles, a blue 20 period moving average, a red 50 period moving average, and a green 200 period moving average. I have fractals there as well. You might see the little yellow, applets there, and then I'm also drawing in particular levels of support and resistance or patterns that I particularly like. So with Eurodollar, we had a push down here, okay, and we've come back up through there, and it some people might look at that as a rather sort of scrappy, scruffy sort of inverse head and shoulders there. Personally, I see that we've had kind of a level there about 115 has acted as a level of support, and kind of about 117 above has acted as a bit of a block there as well. Okay, 117 to 117.50. What I'm interested in, what I'm intrigued, I'm just going to zoom in a little bit. What I'm kind of interested in, and this is some of the things we've been talking about on the Mastering the 4Ms webinars, is I kind of like to see that we have a level of support, but also what we've had here is that the 20 period moving average has been acting as some real dynamic support there. I hope you can see there. Okay, it's that's acted as some real dynamic support there, and now we're up into a block between about 116.25, okay, 117.25, okay, we're in a bit of a 100 pip block there at the moment, and what I'll be looking to see is, can it actually break out of that? Are we going to get a continuation of some dollar weakness, which is what we've had over the last few sessions? A little bit of dollar weakness, in which case, well, then we'd see a bit of euro strength and maybe a break above 117.50, and hold above there. That would be a pretty bullish signal, okay? And then I'd be looking to sort of engage long positions, and then I'd be looking to run that to around about the kind of 119 level there, upward towards the daily 200 period moving average. So that's what I'd be looking at. I'd be kind of looking at that, having a sort of a bullish bias to that on the moment. But we've had Mr. Draghi speaking this morning, and I think he's speaking tomorrow, and I think there's a few sort of euro comments coming out this week, so we shall keep an eye on that. But technically, what I see is that we've had dynamic support there, which has continued to sort of hold, and I'll be looking to see if it gets above that 117.40 level and holds. Then I'll be looking at a move towards 119.50 zone. So that's what I'd be looking to sort of to go towards that. So we've done Bitcoin, we've done Eurodollar. I know some of you are quite impressive in terms of your DAX trading. Okay, so I'm just going to do a very quick bit on DAX for you for today. So on the sort of longer term trade. Okay, so I try and mix up, have a sort of trades for the day, but also trades that might take a little bit of time to sort of watch and what I'm curious about is, the DAX we've had in the DAX has been in a kind of a nice downtrend there. We've talked about a few nice trades that we've had on the DAX over the last few sort of weeks. What I'm intrigued to see is that we had a little bit of a I would be looking this down here on the daily chart. This was a little bit of a false breakout. I looked at that and I kind of liked the way that we've sort of drifted back up to about that 12,100 level. And what I'm seeing today is some of the comments here that to me that's a pretty bullish engulfing candle. Okay, we try to push down. We've created now. Okay, we created a sort of a higher low, and at the moment we're pushing up there. On a sort of stronger move there. Okay, and then if it's early days, but if we were to close that I'd say that's quite a bullish signal for the short term. Okay, on the DAX, and I'd be looking for a drift back up towards around about that sort of 50 period moving average at around about the 12,400. So what I'd be looking for, and I'd be interested, let's say on a longer term trade, is price to sort of drift down, okay, sort of to look to be long around about the sort of 12,100 level, okay, around there, about 12,100 with my stop loss beneath, around about the 11,000 sort of 975 level there, okay. So that's that gives me about 125 pips of trade risk on the big trade, but then I'd be looking to sort of target up towards around the sort of 12,400, 12,500 maybe even, okay. So I'm going to risk 125 pips of trade risk, but there's the opportunity for between like 3 to sort of 450 pips of profit. So that starts to give me a 3 or a 4R sort of trade, and that's the kind of trade I like to take. So on the longer term one, let's just we'll keep an eye on that. If I go down the sort of the time frames though, okay, I'm starting to interested to see how the price action has played out, okay, on an intraday basis. I'm down to the 30-minute chart. We can see that Mr. Droghi's had a few comments, and that's been bullish, okay, for the DAX in particular. But I'm looking at here, is this a case of is this a case that where the sort of people are going to take a little bit of profit, or are we waiting for the next push? So let's maybe go down the sort of the time frames. I'm kind of looking at this, wondering is this sort of going to be maybe a little bit of a double top forming here, maybe on a sort of intraday basis, we'll have a little bit of a drift down, which would also play into my kind of longer term daily chart idea that that would drift down to around about that 12,100, 12,115 level, that we could drift down towards to sort of take a longer term trade. So I'm going to have a little look down there, sort of down the charts here, okay. So I'm kind of the sort of, you can see that we had a real big bullish move up. We've had a little bit of a sideways move. We're making we're making sort of lower highs here, but we're also getting a little bit of a I'd be looking at that as as a little bit of a squeeze, okay, sort of coming on to us there. Now, we'll be looking at, well, how's that likely to sort of to play out? Okay, so what I'd be looking at is, on a sort of a shorter term basis, is on my short term trade, I'd be looking at, well, if we get down and break the that sort of kind of a recent 5-minute low there, around about that, sort of what about sort of 12,145? Okay, I'd be intrigued for a short there. Okay, so about 12,145, running it down to around about the sort of the sort of 12,105 level there. Okay, so that's about 40 pips of trade risk, and my stop loss would be back above that recent high there, around about 12,170. So we've really sort of 25 pips of trade risk for approximately 40 pips of profit. So once again, it's less than 2 to 1. It's still a nice positive asymmetric reward to risk for an intraday trade, and then it would allow me to sort of trade towards my longer term position idea. So that's what as you develop in trading styles, you're able to sort of to look at that and see how you can sort of build a longer term position, but also job around that on a shorter term to basically to sort of take advantage of the trade swings. So there we go. That's on the sort of DAX. What I wanted to talk today about also was the dollar yen. So let's just pull up our dollar yen chart. This is what I'm kind of intrigued in, and I'm going to use this as a bit of a there's a trade idea, but there's also a little bit of a sort of trading education round about understanding your risk profile as a trader. So Admiral Markets run a great collection of webinars, okay, that are educational for traders, cover a wide range of topics. And whilst we're very, very keen on understanding and talking about risk management, one of the things that has to come from you as the trader is understanding your own risk profile. Okay, that's what gets on very, very important. What goes on with your own risk profile? Some of us are more risk acceptance, some of us are more risk averse, and it's about knowing who you are. And I thought this was an example of to sort of demonstrate how we can do this. So here we go. This is the dollar yen. It's a 4-hour chart. It's a nice chart. We've had actually a really nice uptrend there. Hopefully you can see that there. Okay, we can see that we've had a really nice uptrend. But what I've seen this morning here is I'm looking at that now as there's a possible reversal setup here. We've had I'd be looking at that as a as a bit of a false breakout there. Okay, a bit of a false breakout, and we've had that candle close. It's a bearish pin bar. Okay, if you go to the Admiral Markets YouTube channel, you'll be able to sort of watch the archive videos of certainly from the 4Ms of trading webinar series, and we touched upon this last week about sort of rejection candles. I'm just looking at that saying, well, that's actually really a nice opportunity to sort of trade the false breakout. Okay, so the question is, for let's say for the swing trader, how do we do it? Well, I'm an experienced trader, and I'm quite quite aggressive trader when I see my particular setups, and so I am happy to sort of maybe tolerate a little bit more risk than a new trader, because I have confidence and self-belief, and I have a wealth of experience to back me up. So my aggressive trade, okay, here is me looking to perhaps be to short around about the kind of 112.06 mark, with my stop loss above the highs, okay, which would be around about 112.30, 112.31. So that gives me about 25 pips of trade risk, and then I'm going to be looking to target down towards around about that sort of 261 extension, so around about the treble 120 level. Okay, so that's I'm risking sort of 25 pips for a possible 86 pips. So that gives me a reward to risk of about 3.3 to 1. That's what I like. I like asymmetric reward to risk ratios. I'm comfortable if I'm wrong, because I know when I'm right, my trades work well for me. So that's the aggressive setup. But I appreciate some people might be watching and saying, well, Paul, that's not really the way I like to trade. I want to have a bit more sort of, I want to sort of tolerate, my tolerance for risk is different. So we look at, well, how could we set up, a different trade that sort of, helps those people who are learning and trying to understand. So the same next setup is we would look to sort of trade the break of the low of the pin bar there, break of the low of the pin bar, okay, because then we'd have confirmation, okay. So we're prepared to say take a little less risk, but also accept we'll get a little less reward. So there we're looking at short at about treble 185, stop loss in the same place. So now we're risking about 45 pips for 65 pips, okay. So we've got asymmetric reward to risk. It's about 1.5 R to 1, okay, but what you're doing is waiting for confirmation, okay. So some traders would say that would be their preference on how to enter. And then finally, for those of you who are, really are quite risk averse, here's, another way to look at it is, well, not only do we have a false breakout, but, we've had a very nice supporting trend line. And, some traders might say, well, actually, I want to wait to see, the break of the low of the rejection candle and also the break of the trend line before I'd be looking to be short. And that would be looking there around about, looking there about 111.75, okay, but now if your stop is in the same place, all right, well, now stop is around about 60 odd pips away, okay. So of course that has an impact as well. If we go for the same target, well, you're actually, you're risking around 60 pips for 50 pips of reward, which is about 0.8 R. I personally, I don't like that as a trade idea. You'd be looking realistically to sort of go down towards those recent lows, right at 110.50 to make it a good reward to risk trade. But so there you go. Hopefully I've just shown you there. There's a nice false breakout there happening on dollar yen, and there's kind of 3 ways that you could trade it. it based upon your risk profile. And hopefully that just gives you some ideas about, there are many ways for you to trade, okay? And it's about understanding your kind of risk profile as a trader, which is one of the things we'll be covering on the Mastering 4Ms of Trading webinar, and about how you understand that, then you're in a position to take better trades. So there you go, Jens. If we've got a little bit of time left, I'm happy to answer a question or two if that will help our traders listening today.
Gold is also a main interest, so maybe we end today with gold. Our goal is always quick and smart, so we have around about 15 to 20 minutes, but for that daily, 5 days a week, 5 different traders. So I will already say now goodbye. If you'd like to see that again, a couple of hours later, it will be available in our YouTube channel. Just go to youtube.com/AdmiralMarketsFX, and then you can see usually it again. Next live webinar tomorrow, same time, and the last 1 or 2 minutes about gold and Paul.
Super. Thank you, Jens. Thank you. And thanks, Jens. Thanks for the introduction and the words. Gold, here we go, last minute or so. We can see it's been a lovely downtrend. To those of you who've been joining us, we actually started talking about being short here when it broke, okay? When it broke the sort of counter trend line, and it's been a lovely run. And what I like is, to see is we see that actually having been in a downtrend, it actually accelerated away, okay? Which is normally sort of the signal that, the sort of the trend is overdone. It's coming towards the end. We had a bit of a bounce, and now what we find ourselves is, not unlike euro dollar, maybe this is a link to the dollar, okay, is that we're in a little bit of a block there. Hopefully you can see that there, okay? So it's, we've got a little whoops, there you go. What can I say, I'm a better trader than I am an artist, all right? So please forgive my woeful drawings at times, but really I'm looking at that, looking at that kind of block between about 1190 and 1210, all right? So we're in a sort of a 20 to $25 block. See how that I'm looking to see, is that 20 period moving average going to act like dynamic support in the same way that it's acted like that on the euro dollar chart that we looked at the start? Once again, if that does it and it breaks, it holds above it and above the 50 and above that 1215, okay, well then, that's a bullish move, and and I'd be looking back up towards around about the 1240. Alternatively, we can see that actually fall down and maybe form a sort of a double bottom, a higher low there around about that 1175. So just let's see how that plays out. We can see there's a squeeze happening, okay? We can see that it's coiling up there, and we're just getting ready, just having a little bit of patience to watch the next explosive move in gold. So there you go, ladies and gentlemen. Hope that helps, okay? Try to cover as broad as much as we can. Look forward to seeing you next Tuesday. Trade well this week, and yeah, good trading, everybody. Goodbye.